Last week, I started with just $600 in my account, and by the end of the week, I flipped it into $4,200. No gambling, no crazy leverage, just one simple setup I've trusted for years. Here's how it works. The market builds up liquidity above a high or below a low. Traders get baited in, thinking it's a breakout. Then smart money sweeps that liquidity, flips the structure, and the real move begins. I wait for that moment, the manipulation, the displacement, the clean entry point, and that's when I strike. In the past week, I caught this setup multiple times, each one with tight risk, each one with clear targets. That's how $600 became $4,200 in just 7 days. And the best part, the setup isn't rare. It shows up nearly every single time across Forex and even indice pairs. In this video, I'm going to walk you through exactly how I use this setup to flip that account and why it continues to be one of the most reliable models today. With discipline and one solid setup, you can scale in a smart way, and this is proof. This strategy is simply amazing and it will change your life. So it follows all the ICT concepts where we have the market structure shift, we have the liquidity sweep, and we have the rejection of the high. So as you can see here, we just want to make sense of everything. Once we have a liquidity sweep, we want to then track it by finding a market structure shift. So as you can see, we have a market structure shift right here. So what we're going to do, we're going to take our Fibonacci and we're going to mark from high to low. So once we mark from high to low, we're just going to set up our position just like this. Our stop loss could cover the high just a bit, just so we can, avoid the stop loss being taken out. But as you can see right there, we target a 1 to 2 risk to reward ratio. So as you can see, we're going to wait for price to then pull back into our entry point at the 62% golden zone. Now this zone has the most high reactive rate and it is essentially the best zone to trade. Once we get a reaction off that zone, we can expect the market to then continue on the trend. So as you can see right here, it's clear price action and market structure happening. We retraced, we filled in this entire imbalance right here. We tapped into an area of high price action. As you can see what happened, we then started to distribute towards the downside. And again, if you want us to pass and manage your funded challenge guaranteed and help you get your very first payout, you don't pay a single penny until you do get a payout. And the best part is you keep 70% of the profits and we only take 30% of your profits. So click the first link in the description and we'll help you do exactly that. But as you can see, pretty simple. Boom, boom, boom. We have a market structure shift, liquidity sweep. You can see the rejection of the highs right here because we weren't able to get above that high. And then we retraced into the area and then we started to distribute towards the downside. So pretty simple. And what I'm going to do is I'm going to walk you guys through a chart example now because, yeah, it's very simple. So as you can see, we're going to be trading from 8 a.m. all the way to 10 a.m. NY time. So we're just going to mark that out on our chart. 8 to 10 a.m. New York. So 8 to 10 a.m. New York time. What we're also going to do, we're going to identify a MSS / liquidity sweep / rejection of the high. Enter on 62% zone. So we're going to be entering on the 62% zone. Again, it's so simple and I just want you guys to be able to master this, okay? So don't forget to leave a like, comment, and subscribe. And if you've made it this far, don't forget to leave a like. So let's get straight into it. So as you can see right here, boom. We'll just let the market do whatever it wants to. Now, if the market wants to go up, the market can go up. If the market wants to go down, the market can go down. As you can see right here. Boom. So as you can see, the market did show signs of a market structure shift right here. In terms of finding our liquidity sweep, you can see it was taking out all of this buy side liquidity, as you can see right here. Boom. all of that liquidity was taken out. And as you can see, once we got into these levels, we started to have wicked candles. This is showing that price is now getting weaker at these levels. So we could look for price to start distributing towards the downside again. So what we're going to do, going to enter 62% zone, just like that. Short position. We're going to put our stop loss just above the high at 7.5 pips, and we'll target 1 to 2R. As you can see right there, that's about 14.8 pips. Now, if there are other areas of liquidity to target on the market, you can definitely put your stop loss just a bit further. So as you can see, sorry, not your stop loss, your take profit. So you can see we have a 2.35% ratio here. We have a 3.62% ratio right here. So let's see how these levels actually do play out. And let's remember where our 1 to 2R actually is, which is right about here. So we just let it play. As you can see, we come back into the level just like that, boom, 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 and it does end up going to the 3.62% ratio zone, which is about 26.3 pips. So again, you're not limited to 1 to 2R, but you just have to make sure that there are liquidity points on the other side of the market to target. And even if you don't want to target the other liquidity points and you just want to stick to 1 to 2R, identifying these liquidity points will also add more confluence to your trade. So just like this, as you can see, if there's more liquidity points, we can expect it to distribute lower towards the downside. So that's really simple. Again, if you guys want us to pass and manage your funded challenge guaranteed and help you secure your very own payout, just click the first link in the description and we'll help you do exactly that. But let's just go back here. As you can see, we'll go back to the 5-minute time frame. So again, we're on the 5-minute time frame. We're on a 5-minute time frame, and as you can see, we're going to look for that market structure shift with displacement again. We're going to look for that liquidity sweep and that rejection of the high. So as you can see, we just let price play and do exactly what it wants. So if price wants to go up, it can go up. If price wants to go down, it can definitely go down. So as you can see, first things first, we identified the liquidity sweep, which is resting right about here. As you can see, price is also showing signs of weakness at these highs. You can see by the rejections of the candles. Boom, we have a market structure shift right here, and then we target that 62% zone. Boom, perfect. So what we're gonna do, put our stop loss just above the high, keep it at a minimum of 6.5 pips, and we'll look at targeting 1 to 2R. Again, we just want to identify the potential liquidity points that or on the other side of the market where we could expect price to potentially go to. And again, if you don't feel comfortable targeting them just because they're a bit far, you can still use them to add confluence to your trade. So let's actually see how this trade does end up playing out. As you can see, it does end up going to that 1 to 2R and taking out the liquidity point, which was about 1 to 2.42R. As you can see right there. After that, let's see what it ends up doing. You can see it comes back to that liquidity point right there. Let's see if it does actually end up going lower. So yeah, it does end up going lower. And yeah, it does end up going lower and taking out both liquidity points. So that's amazing. It even takes out the structural low, which is right about here, just going into the next day. So that's about 5.68 pips. But again, I recommend you stick to 1 to 2R and you just use it to add confluence to your trade. But if you're confident and you really want to target more, then it's totally fine. But again, if you guys did enjoy, don't forget to like, comment, and subscribe, and I'll see you guys in the next one.